as rig counts continue to fall and job losses in the oil and gas industry continue to mount up, OPEC comes out today and announces they are in fact increasing production again by 411,000 barrels a day in July. There's a lot of speculation out there as whether they will actually do it or not. The majority of people in the industry believe that they will follow through with these production increases. There's still quite a few people that think they might be pulling a head fake. Personally, I think they're going to do it. I think they are. While the whole head fake thing is surely a possibility, if they really want to cement their market share, their increase in market share, which is what they are going for, they're going to really need to increase production and not, pull a fast one. It would be the equivalent with all the production increases totaled together about 1.35 million barrels of oil a day, but for the fact that they had a couple of countries overproducing before this started, and they're saying they're going to put a stop to that. I don't know about all that. What we have seen historically is that if these countries can't make their money based on price, they will try to make their money based on volume. It is more likely that all OPEC countries, except for Saudi Arabia, increase production more than they are supposed to try to make up for their losses by selling more volume at lower prices. This is how this always works. This is why when OPEC increases production by even a relatively modest amount, it always turns into a disaster because everyone starts chasing barrels, everyone starts chasing dollars to try to make up for lost revenue, and we end up with a huge oil crash. That's how this always happens. And we already know that Russia is going to do just that. So the one thing that could soften the blow would be stronger sanctions on Iran, which lessens their oil exports. Because the United States, oil production in the United States is already dropping and is going to continue to drop. And as prices drop, that drop is going to accelerate. But with traders in the United States seemingly taking a wait-and-see approach with OPEC and their production, this isn't going to be a huge crash like we all initially thought. This is going to be like a slow death crawl to the bottom. Yeah, and that's what we're seeing play out. What I believe we're going to see is oil rig counts falling significantly, but the total rig count won't continue to fall significantly because I think it's going to be propped up a little bit by rigs drilling for natural gas, because natural gas is still very bullish. With oil production falling in the United States, natural gas production is also going to fall, and prices for natural gas are going to rise significantly, and they're already fairly healthy. So keep in mind the natural gas market in the United States is a localized market. We have a much bigger impact on natural gas prices with our drilling programs than we do with global oil prices. Another thing that may sort of blunt the fall of oil prices is the fact that this is all occurring going into the summertime when oil demand is at its highest. So expect to see continued announcements from U.S. oil companies of further capex reductions, further rig losses, and more layoffs in the U.S. oil and gas industry. Thanks.